warahmatullahi wabarakatuh. Salam sejahtera bagi kita semua. Shalom, Om Swastiastu, Namo Buddhaya, salam kebajikan. A very good morning, Excellencies, distinguished guests, ladies and gentlemen. Welcome to the 50th IPA Conference 2026. Please give a big round of applause. Celebrating half a century of progress, our theme this year's 50 years of energy partnership, shaping the next era for advancing growth. My name is Bunga Harumdani, and it is an absolute privilege to serve as your Master of Ceremonies. Ladies and gentlemen, this milestone convention is proudly hosted by the Indonesian Petroleum Association. First and foremost, I would like to extend a warm welcome to all the respectable speakers and moderators. Good morning. And all distinguished guests, ladies and gentlemen, we are truly grateful for your presence today. Distinguished guests, ladies and gentlemen, to properly initiate today's proceedings, we inaugurate the opening of the day with an address from the leader of our association. Ladies and gentlemen, please welcome the IPA President, Ibu Katibu.
Pak Kepala Amigas, global CEOs, distinguished guests, ladies and gentlemen, selamat pagi and good morning, everyone. It is my pleasure to welcome you to the 50th IPA Convex. As president of IPA, I have the privilege of representing a membership comprising national and international energy companies. We work across Indonesia and contributing every day to the country's energy future. When IPA was established 5 decades ago, Indonesia's energy sector was just started. Technology was less advanced, and the operating environment was far less certain. Indonesia recognized early on that energy development requires partnerships. Indonesia pioneered the PSC framework in the 1960s, a model now used all over the world. What brought government and companies together then was a shared necessity. Energy was essential for national development. Investment was needed to unlock it, and Indonesia chose partnerships as the best way forward. 50 years on, the context has changed, but that fundamental has not. Today, IPA brings together national energy companies such as Pertamina, Medco, EMP, and Saka Energy, alongside international investors, including ExxonMobil, ENI, Impex, PETRONAS, Mubadala, KUFPEC, and BP, and the service companies which supply the industry. Together, our members deliver more than 95% of Indonesia's oil and gas production. We create hundreds of thousands of jobs across the country, from Aceh to Papua, and we're proud to support many other critical industries. Our industry is at a pivotal moment. Indonesia has ambitious national goals to strengthen national energy security and to realize its vision for 2045, becoming a top 5 world economy. It is a country with significant oil and gas potential, much of it in deep water and remote environments. Turning that potential into reality will depend upon creating the conditions that enable companies to plan for and commit resources, including advanced capabilities to projects that take many years to build, but can deliver value for decades. The oil and gas industry shares a clear responsibility to safely deliver reliable and affordable energy while supporting the transition to a lower carbon future. Meeting these goals will require a long-term commitment and long-term investment, and that means partnership must be more than a word. It must be something we practice together every day. At the same time, global uncertainty, including ongoing conflicts in the Middle East, is reminding all of us how exposed energy systems can be and how sharply competition for capital can intensify. Trust and confidence between partners is more important than ever in an uncertain environment. From IPA perspective, successful partnership rests on three critical foundations. First is legal certainty and contract sanctity. Upstream projects are capital intensive, long cycle, and high risk. Investment decisions are made over many years and decades of project life. When fiscal terms and contracts are respected and abided by over time, confidence grows, capital stays, projects move forward. That helps create conditions where investments can deliver significant value for Indonesia. Second is cycle time and delivery pace. Long cycle times are one of the biggest risks in our industry. We all share the challenge to accelerate development. We can overcome this by working together to minimize delays. Third is exploration. We need to explore to find more oil and gas for the country. Indonesia still has significant potential. More than 50% of its basins are unexplored or underexplored. We applaud the Ministry of Energy and Mineral Resources leadership and active efforts to offer new exploration acreage to investors, which will allow the industry to explore and unlock more energy supply for the country. Indonesia has clear production ambitions, and IPA fully supports them. Turning these ambitions into reality will require speed, coordination, and alignment across the system. From IPA's perspective, we are committed and willing to support and collaborate. Experience shows that strong alignment between the government and the industry enables projects to progress smoothly, achieving our shared goals. The stronger the alignment, the more momentum it creates, the greater the progress. Distinguished guests, energy is not abstract. It powers homes, schools, and hospitals. It creates jobs and supports livelihoods, and it underpins national progress. Indonesia has established a modern energy industry. Now, in this dynamic era, Indonesia is ever more important to the global energy markets. IPA and all of our members stand ready as a strategic partner to the government of Indonesia, ready to invest, ready to collaborate, and ready to help deliver secure, affordable, and increasingly low-carbon energy for the country's economic prosperity and long-term growth. The success of this convex should not just be measured by the ambition of our words. Let it be measured now and for the decades ahead in the success of our partnership, in the unlocking of investments, in the acceleration we may achieve in delivery, in the progress that supports Indonesia. I'm convinced that with leadership from the government and genuine partnership across the industry, Indonesia can realize its full potential in the global energy system as we help shape the next era of continued growth for Indonesia. Thank you very much, everyone, for joining the Convex. I sincerely wish everyone a productive and impactful IPA Convex 2026. Terima kasih banyak.
Thank you, Ibu Kathy Wu, for setting a visionary tone for this Jubilee edition. Once again, thank you very much. Ladies and gentlemen, we do provide interpreter services for our international guests. Interpretation devices are available at designated area on your right side. Thank you. Well, ladies and gentlemen, we now transition to the anchor session of this morning, the Global Executive Talk. As the energy industry navigates increasing capital complexity, geopolitical uncertainty, and evolving energy transition pathways, industry leaders are being challenged to operate in fundamentally different landscape. Today, we find ourselves in what this session describes as the end of easy energy, the new reality of oil and gas. But before we welcome our distinguished panelists to the stage, I invite you to direct your attention to the main screen for a brief introductory video. Here it is.
The end of easy energy, the new reality of oil and gas. The global energy sector is entering a new era that is much more complex, where easy energy no longer exists. Currently, efforts to locate oil and gas resources are growing increasingly complicated, costly, and risky. Geopolitical forces, as well as rising environmental concerns, are making the global energy picture more challenging. However, the need for energy continues to increase. According to data from the International Energy Agency, world energy demand grew by more than 2% in 2024, which is higher than the average of the previous decade. Demand for oil and gas is also still high in the midst of the energy transition, which has become a global agenda. Global oil demand is expected to increase by about 13%, from 100 million barrels per day in 2024 to 113 million barrels per day in 2050. Despite the existing challenges, a number of oil and gas companies are adjusting their operations by being more selective in their investments in a country. The difficulties are becoming more complex as inter-country conflicts and trade disputes threaten global oil price stability. Various conditions also impact Asia, which is the region with the highest energy demand in the world. However, industrialization efforts greatly require competitive fossil energy, even while clean energy development continues to be pursued. Indonesia, as one of the countries in Asia, needs to observe the existing dynamics, considering that the demand for fossil energy is still high, with a production target of 1 million barrels of oil and 12 billion cubic feet of gas per day by 2029. Technological innovation is the key to improving exploration and production success in the midst of the past easy energy era to reduce risks. Furthermore, corporate players require a more competitive investment climate in a country to ensure that upstream oil and gas projects remain economically viable in the face of global concerns. To face this new reality, a strategic collaboration between the government and oil and gas companies, both national and global, is required to strengthen legal certainty, increase fiscal appeal, and simplify bureaucracy in order to create a more conducive business environment.
Well, ladies and gentlemen, we are now moving to the Global Executive Talk, addressing the end of easy energy, the new reality of oil and gas. I would like to remind you that this session features an interactive Q&A segment. You may submit your question at any time by scanning the QR code currently displayed on the screen. Thank you. And to steer this high-level dialogue, we are honored to welcome a seasoned industry expert and strategist as our moderator. He is the Senior Vice President at S&P Global Energy, leading upstream data analytic and insight strategy for the global oil and gas sector, driving innovation, research, and client-focused solutions across the energy value chain. Everyone, please welcome the moderator of this session, Mr. Daniel Pratt.
Okay. Good morning, everyone, and welcome. My name is Daniel Pratt. I am the Global Head of Upstream Solutions at S&P Global. And on behalf of S&P Global, I would like to congratulate the IPA on its 50th conference. It's a tremendous achievement and worth another round of applause, I believe. It's a privilege to moderate this discussion with such an extraordinary group of industry leaders at a moment when the global energy system is being tested from every direction. The question I want to use to frame our conversation today is a simple one, but it carries enormous consequences for producers, investors, governments, and consumers alike. Are we in a new reality where the era of easy energy is truly behind us? For years, market observers had argued that peak oil demand is approaching and that era of easy oil is already over. At one level, the numbers do suggest that finding and developing oil and gas resources is becoming harder. The industry is pushing further into more technically complex basins, deeper water, and drilling in far less basins today than it was 10 or 15 years ago. And that naturally raises the question, are we simply seeing the effects of depletion and rising geological risk, or is the larger story actually above ground? Because today's energy landscape is no longer shaped by subsurface geology alone. It's shaped just as powerfully by energy security in the backdrop of conflict, trade tensions, sanctions, regulatory uncertainty, environmental pressures, supply chain fragility, and a broader geopolitical environment that is much less predictable than it was even a few years ago. So in that world, above ground risks now rival and in many cases exceed what lies beneath the surface. That's why geopolitics have become a core business variable. The current conflict in the Middle East and disruptions in the Strait of Hormuz have reinforced how exposed the sector remains to geopolitical shocks. And all this is happening at a time when capital has become much more selective, is flowing towards the most advantaged barrels and molecules, to projects with resilient economics, lower execution risk, and faster payback. This creates sharper portfolio trade-offs for companies trying to balance short-cycle cash flow with long lead time investments that are essential for future energy supply. So that brings us to execution. In this environment, future success is not just about resource access, it's about integrated project delivery, strategic partnerships, contracting innovation, and the application of technology to improve productivity, reduce costs, and manage complexity. Competitive advantage increasingly belongs to those who can execute reliably in a world that is more fragmented, more risk-sensitive, and less forgiving of delay. And nowhere is this discussion more relevant than here in Asia, which remains at the center of global energy demand growth. For countries across the region, the challenge is not simply finding supply, but securing reliable, affordable, and resilient supply. For Indonesia in particular, the opportunity is significant, but so are the challenges. So So how do companies like the ones we're going to see on stage today balance all of these things? Risk, resilience, growth versus efficiency, capital discipline, hydrocarbon versus new energies, how to deliver commercial performance while supporting national growth and domestic initiatives, all while navigating this evolving market risk and uncertainty. So not so easy, I think, and we'll hear from the companies. So as we begin, that is the lens I would offer for today's conversation. Perhaps the real question is not whether the world is running out of hydrocarbons, but whether the industry can still deliver them in a way that is investable, timely, secure, and politically sustainable. So at this time, I'm going to welcome on stage our speakers for this session. I'm truly excited to have this group of industry leaders. I think we're going to get a very diverse and unique perspective on the topics that we're going to discuss today. Let me first introduce Oki Muraza, Deputy President, PT Pertamina. Tengku Taufik, President and Group CEO, PETRONAS. Mansoor Mohamed, CEO and Managing Director, Mubadala Energy. Roberto Lorato, Director and CEO, MedcoEnergi. And Abdullah Al-Osaimi, Executive Vice President, Finance and Administration for KUFPEC. Gentlemen, thank you for joining today. To open our session, each of the speakers will be given a few minutes for opening remarks.
Thank you, Dan. Very good morning, ladies and gentlemen. Assalamualaikum warahmatullahi wabarakatuh. Would like to greet our lovely Pak Kepala SKK, Pak Dr. Joko Siswanto, the chairwoman of this 50th IPA, and all of the speakers, distinguished guests, and ladies and gentlemen. I would like to start by understanding what's happening these days. So since the end of February 2026, we have seen the rupture, according to Ray Dalio, or breakdown of the global supply chains, or according to Professor Jeffrey Sachs from Columbia University, there is a reverse globalization happening on Earth. So how we deal with this reverse globalization, this is basically the facts that we have. Now we can see this slide. So basically the first thing that we can do, of course, trying to accelerate the productions, the exploration that we have in the country. So the first thing that we do to encounter the reverse globalization is basically by trying to increase or to maximize the domestic productions of oil and gas. Secondly, of course, we need to try to have partnerships. Here we have so many companies which are our reliable partners. And the third one, of course, we try to engage with the government, in which that we have G2G partnerships. So on the next slide, I would like to tackle a bit about the word of easy, which is briefly mentioned by Dan. Basically, indeed, the era of easy energy has already passed, but if we see the next slide, maybe I will go directly to this slide, which is quite interesting. So in Indonesia, indeed, the easy era has already passed, but we have tremendous opportunities. So if you are investors, if you are engineers, if you are regulators, you want to see the plethora opportunities that we have in Indonesia. So on the slide, we can see basically the opportunities that we have, consisting the unconventional. So the good news that recently we have 11 billion barrel of oil in place for unconventional. So our homeworks nowadays is basically how can we have the advocacy to our government to have the fiscal. Then we try to invite so many partners, service companies to create the ecosystems just like the one that we have in Permian basins. And of course, we try to develop the manpower which will be ready for this unconventional business. The second one is the mature fields. We handle mature fields by enhanced oil recovery. Fortunately, we have successful pilot for chemical EOR. We still have about 4 billion barrel in one field in Minas. This is another homework that we do. And then we have, of course, the thermal, which is one of the largest on Earth. We try to have expansions by engaging with our sister company, PLN, on electricity. And last but not least, of course, we try to have the well services, etc., for the increasing of the production. So indeed, there is a problem with the end of easy energy, but we do have opportunities in which that we can deploy the technologies, we can engage with so many partnerships, etc., etc.
Excellent.
Thank you.
Thank you. Taufik, please.
I'll try to keep this short, Dan. Allow me to begin by saying Bismillahirrahmanirrahim. Assalamualaikum warahmatullahi wabarakatuh. Salve, Om Swastiastu, Namo Buddhaya. Selamat pagi, salam sejahtera, salam kebajikan saya ucapkan kepada bapak-bapak, ibu-ibu sekalian yang kami hormati dari Petronas, terutamanya Bapak Joksis yang distinguished guests, ladies and gentlemen. Izinkan saya lanjutkan dalam bahasa Inggris. First, allow me to congratulate the IPA board members and the association on this milestone edition of the IPA Convex. The topic as presented by Dan is the end of easy energy. It is an incredibly accurate description of the operating environment that me and my colleagues here now inhabit. What I hope to offer this morning, together with distinguished panelists, is a clear-eyed account of this new reality. It is truly the end of energy as we know it. The energy landscape has undergone a series of structural shifts, and those structural shifts have shown no signs of slowing down. What we're witnessing, everyone here, in real time, is a fundamental reorganization of how energy is delivered against a backdrop of persistent geopolitical fragmentation, elevated economic volatility, and ever-intensifying climate expectations. Yes, for the last one, the calls may have calmed down, but the expectations are still growing. The conflicts that have unfortunately unfurled in both Europe and the Middle East continue, and there is no near-term sign of resolution. Trade tensions, as mentioned by Dan earlier, they're reshaping capital flows, and what we are seeing is an entire rewriting of what counts as a reliable supply chain. As we move forward, there will be challenges, and challenges are something that our industry is used to dealing with, but whether we can deal with those with certainty, discipline, and the speed necessary to ensure supply addresses demand is the core question that needs to be addressed. So the challenge is actually visible if you drill down on investment data. Let me just share something here. What people may be familiar with is that the world has heard in the last year that renewable spending has outstripped core conventional energy. And you hear that it's grown to a ratio of 2 to 1. Out of 3 billion, it's 2.2 versus 1.1 of core versus renewable. But think about drilling down one step in the core energy system that we're familiar with, which is hydrocarbon-based. Nearly 90% of annual upstream investment, I think Kathy referred to it, since 2019 has been dedicated to offsetting production declines. It's not for new resources. It's not to address new demand growth. And the opening montage indicated that the world is set to actually see a growth in oil demand from 100 to 113 million barrels per day. So upstream oil investment, if you drill down one level below, fell by 6% in 2025. and that is the first year-on-year decline since COVID. Now that brought total upstream oil and gas spending below 600 billion. And of that, 40% is directed specifically at just slowing production declines at existing fields. Now this is an industry that is expected to sustain current supply, develop new resources, decarbonize operations, and all of this, in summation, makes the underlying arithmetic impossible. If we go to future supply, the volume of capital required to advance new projects is substantial, yet the price environment is not exactly ideal over the past few years before the conflict. It has become very challenging to clear hurdles that make financial investment decisions viable. But this is an industry that's used to complexity and uncertainty, and this industry knows how to develop. The question is whether economic conditions can be adequate to make sure development happens at pace. As often referred today, Asia-Pacific is the center of gravity for demand. Now, if you look at the Asia landscape, this region is home to 60% of the world's population, and it accounts for 50% of global primary energy demand growth. This is expected to persist all until the first half of this century. This region will also be responsible for driving over half of projected power sector demand growth between now and 2030. The primary answer to this is LNG in meeting that demand. Now, while short-term disruptions may emerge, the long-term trajectory shows little signs of moderating. Emerging markets across the region, of course, India, China, Southeast Asia, are expected to drive virtually all incremental global energy demand growth in the decades ahead. Southeast Asia alone, where Indonesia sits at the center, is driving up to 35% of this energy demand increase, with the electricity demand rising over 60% in the last 10 years alone. Indonesia, and I always implore and convey this message to my friends here, Indonesia sits squarely at the heart of this equation. You have a population approaching 300 million. You are Southeast Asia's largest economy. You've generated a GDP of almost approaching USD 1.5 trillion 2 years ago, 2024. And the roaring demand doesn't seem to stop. But alongside this roaring demand, there is a new reality. For advanced economies, energy security is centered on critical minerals, and resilience on clean energy supply chains is growing, and they will be seeking to feed industry with an AI-driven era. But in Southeast Asia alone, there are still over 100 million people who still rely on very polluting cooking methods, so the immediate questions for energy needs are more elemental. We need reliable power for households, schools, industries, hospitals, and we need to keep fuel prices within reach, i.e. affordability is core. Now, against these realities, PETRONAS has consistently argued the path forward is not a singular one. It cannot be defined by ideology, or we cannot frame it as simply a binary argument. PETRONAS is Malaysia's national oil company, and PETRONAS knows what it means to carry the weight of a nation's energy security. Experience has taught us that addressing this complexity cannot be seen only from our lens and cannot be insular. So drilling, the more we drill, yes, we may look at addressing geological complexity, but there will still be the challenge of, as Kathy also inferred, long cycle projects, which are getting increasingly difficult to finance. There needs to be a different way to share risks. And when we talk about sharing risks, we inevitably come to the subject of partnerships. Partnerships with real long-term mutual interests. Countries that enter today with a very difficult environment. Countries which enjoy diversified supply relationships, robust infrastructure, durable partnership models, they will be the ones who are enjoying the safety and insulation. They will be the one more resilient. Those without that foundation have seen the full impact of the disruption. We've seen higher prices, we've seen supply challenges, and fiscal pressure that limits the country's ability to respond. The value of a partnership is most visible not in good times, but indeed moments like today. PETRONAS has been in Indonesia for over 20 years. Our first entry was in Ketapang in 2000. Today, our footprint has grown across 11 PSCs, and the downstream operations have also seen presence in petrochemicals and lubricants. We have a sustained commitment to Indonesia's energy future. And of course, it goes without mention, I can't stand on this panel and not mention that we've embarked on our first satellite business model with our partners Eni. And this consolidates selected upstream assets in Malaysia and Indonesia into a shared operating structure designed to unlock advantage barrels. We both have a similar conviction that we need to pool capability across borders. And through a tripartite joint development agreement, ASEAN countries realize that this energy burden cannot be dealt with alone. We are working on an ASEAN power grid to also build the exporting renewable energy capacity in Vietnam to address the needs in both Malaysia and Singapore. As I close this brief message, ladies and gentlemen, Bapak-Bapak, Ibu-Ibu yang saya hormati, the industry has been presented with what has been framed as a choice. You want energy security or you want to move to energy transition? The pressure of this binary choice shows that the framing of this question is actually entirely inadequate. It is at gatherings like IPA that we will need to shape the energy landscape of countries and indeed the entire region of Southeast Asia, not for us, but for the next generation. This industry, it has navigated disruption before. What determines whether we emerge from it stronger is not the scale, but whether we are all disciplined and we all have a shared conviction. What we owe the next generation is capital discipline, transparent and genuine long-term collaboration, and we need to think about dismissing borders, and particularly geographical or industrial borders, and the willingness to make enduring commitments and partnerships last. It is partnerships that have served PETRONAS best, not only in Indonesia, but everywhere we operate, and we build those partnerships on the back of complementary strengths. So I look forward to the conversation. Thank you, Dan, for giving me this little space to say our piece, and I do hope we also build more areas of collaboration. Wabillahi taufiq wa hidayah. Wassalamu alaikum warahmatullahi wabarakatuh. Thank you.
Mansoor, please.
Assalamu alaikum. It's a great pleasure to be here today. Good morning, colleagues, partners, and friends. The question we've been asked to address is whether this is the end of any easy energy. My answer is simple. Energy was never easy. What has changed is that today the uncertainty is higher and the risks are greater. The balance between available capital, policy stability, and energy demand has never been so delicate. The lesson for all of us is clear. In this new reality, we must accelerate the development of energy projects and not slow them down. This requires a new partnership, a long-term vision, and a delicate balance between meeting energy security and energy transition priorities. The current situation has sharpened global awareness of energy and security. According to the IEA, the conflict has taken over 10% of global oil supply and close to 20% of global LNG offline, disrupting export infrastructure and driving Brent prices beyond $100 per barrel. We now live in a world where energy security is dominant policy driver and where nations are rethinking supply chains and investing to reduce their import exposure. And yet, despite volatility, demand for oil and gas remains resilient. Analysts at Wood Mackenzie expect global liquids demand to hold above 100 million barrels a day well into the 2030s. When we look at gas demand, LNG imports into Asia have undoubtedly dropped as a result of recent challenges. The IEA's most recent quarterly report predicts that the global natural gas market will remain tight for 2 years. But while the challenges may seem more critical than ever, our view is that the fundamentals point in one direction. Natural gas will continue to be a vital component of the energy mix. This time last year, the IEA predicted that the LNG supply was set to rise by 7% in 2026. With new projects coming online and economic growth remaining robust, despite current challenges, these dynamics remain in play. Gas continues to provide reliable supply for energy security while being a vital component for energy transition. The new reality is one of volatility and complexity, where short-term disruption must be managed, but where long-term fundamentals remain unchanged. Now, here, this reality is more visible than ever in Indonesia. For Indonesia, recent months have underscored the urgency of self-reliance in energy. There is an exceptional opportunity, rising demand, strategic geography, and huge potential of its deep water resources. It is a nation that is prepared to become a regional energy hub if we can align incentives, approvals, and infrastructure. At Mubadala Energy, we are proud to contribute to that ambition. Our multi-TCF discoveries in the Andaman Sea, Layaran and Tengku rank among Asia's largest recent gas finds. Tengku is targeting this year for FID, with the first gas expected by the end of this decade. Projects like this demonstrate that strategic partnership and decisive execution can achieve. This is in addition to our wider growth story in the Andaman Sea, which now includes the Southwest Andaman PSC and Central Andaman license, making us one of the largest net acreage holder in the region. But today's challenges have centered more attention on the energy security, and it is tempting to see energy security and the energy transition as opposing goals. But in truth, they are linked to each other. The fundamentals of the transition remain constant. We must reduce emissions, expand renewable, and decarbonize. But gas, abundant, reliable, and lower carbon, will remain essential in the energy mix. In a volatile world, it is both transition fuel and a security fuel. For Indonesia, where coal accounts around 68% of the country's electricity supply, this is reflected in the country's aim to double gas production by 2030. But the reality we must face is that energy systems can't transform overnight. They evolve through a pragmatic, credible approach to change. So yes, the age of easy energy is over, but let's remember it was never truly easy. Uncertainty, risk, technical challenges have long been the hallmark of our sector. In the new reality, we must do what we have always done best: think long-term, find solutions, because a future that balances security and transition will depend on how quickly we can deliver energy responsibly, reliably, resiliently, despite the short challenges that we face. Thank you so much.
Thank you. That's a click.
Thank you. SKK as Chairman, IPA President, IPA Board, colleagues, friends, good morning, and thank you for giving me a chance of sharing some of Medco experience in this increasingly complex world. As already mentioned by Daniel, Taufik as well, the easy barrels are gone. What is left is harder to find, more expensive to develop, often slower to obtain the permits required to FID a project. And our industry is held to sustainability standards that continue to rise. On top of this, of course, current geopolitical tensions are creating additional challenges in the form of disruptions to supply chains, energy security, and extreme volatility of commodity prices. At MedcoEnergi, we try to build a company for this reality, becoming more disciplined, selective, clear-eyed about the role that hydrocarbons will continue to play in Asia's energy mix for decades to come. We have grown our portfolio around the three key businesses, in fact. oil and gas, power and copper, power and, of course, money in copper and gold mining. Oil and gas remains our backbone, with over 350,000 barrels of oil equivalent of operating production. Gas now represents over 70% of our portfolio because in Asia, we see gas less as a compromise and more as a pragmatic answer. It displaces coal, it firms intermittent renewables, and it does so in markets where electricity demand is still growing at multiples of the OECD average. The energy transition in this region will be built with gas alongside renewables, not in spite of it. Alongside our core E&P Upstream, we have created and we are running a focused power business. Our test for every project in power is the same. Does it stand on its own commercial, and does it serve good reliability and affordability? And yes, we also hold a strategic position in Oman, copper and gold, which gives us exposure to some of the critical minerals required to support the economic electrification. So as you see, we're trying to build a portfolio at the cross of these challenges. More oil and gas, more energy, taking a bigger step into power to support the electricity growth, but maybe it's a peculiarity of our company, also an important investment in copper mining. Copper mining because, as you know, copper is becoming more and more one of the critical elements to support the electrification of the economy. What ties our portfolio together also is a deliberate choice to be balanced. So trying to be balanced between growth and discipline, balance between hydrocarbons and transition, balance between ambition and execution. Let's see how this has translated for us into our strategy. Our strategy really rests on the key three words of this page: value, focus, growth. Value first, because in this environment, and for a company like Medco that has to compete every day in the market for the trust of its investors, value visibility is what matters. We, in oil and gas, aggregate large producing assets selectively. When the easy barrels are gone, scale and asset quality are what carry the portfolio, so our preference is for mature assets where we can take the operating control, where the fiscal terms are predictable, and where we can see upside and the execution path before we commit. Of course, we also do exploration, but a characteristic of our strategy in the last 10 years has been to grow through extensive M&A. And once we selected the location, the country, the asset, then we focus our resources and our capabilities to extend the resource life through discipline development and exploration. And when needed, of course, we also partner where technology or the scale calls for it. Gas remains central, as I said earlier, and within gas and through gas, Medco is also becoming increasingly an integrated gas-to-power business, which positions us where demand signal in this region is strongest and where margins tend to be more resilient through the cycle. And in a volatile environment, of course, capital allocation matters more than ever. We hold the line on cost, our lifting costs are competitive globally, and we run the balance sheet conservatively with the cycle we are in firmly in mind. On the power side, we are building a diversified portfolio of IPPs across gas, geothermal, and solar. Our partner business is our platform for our investment in renewables. But the filter for approving projects is the same as oil and gas. The project has to clear its own commercial hurdle, and it has to add value to the system, not simply to the capacity figure. And on ESG, we are treating as every one of course, of my colleagues. We are treating ESG as an operating discipline, not a reporting exercise. That shows up in emissions intensity, safety performance, and ultimately in our cost of capital, which I will come back to later. Our stake in Amman is strategic, but the governance is at arm's length, and what we really gain out of this is the exposure. Exposure because, as mentioned earlier, copper is increasingly seen as one of the binding constraints on the energy transition. What's the result of these 10 years of efforts? Well, I think this slide shows that the strategy which I described has been delivering for us, not just in a single good year, but consistently across 10 years, including some years that were very difficult for our sectors. We have expanded our gas portfolio significantly, positioned Medco in line with Asia's need for lower carbon, reliable energy source, and demand that continues to grow. Reserves life is over 11 years and maybe more. Interestingly, our average reserves replacement is over 200%, meaning that we are replacing, through exploration and through extensive M&A, more than twice the barrel we produce. Power sales have grown from 1,700 to 4,500 gigawatt hours in this year. With renewables now a meaningful contributor. EBITDA has grown from 260 million to 1.26 billion. So this is, in 10 years, almost 5 times growth. Growth has compounded across different cycles that have been, and not just concentrated in the single one, in the good ones. We have strengthened the balance sheet meaningfully. We lowered the leverage with longer maturity profile and a return policy that our shareholders can plan around. None of this is glamorous, perhaps, but in our industry is what allows us to keep optionality. We need, as a public company, a company that lives from the trust of its investors and thus have a large recourse to debt and to global international investment funds. We need to maintain optionality through downturn rather than having this be taken away from you when the cycle is against you. As I flagged earlier, our MSCI ESG rating has been upgraded to AAA, which is putting now us in the top 11% of the oil and gas companies assessed globally. This matters. This achievement matters because increasingly ratings of this kind are not just a reputational matter. They feed directly into our access to international capital and our cost of capital. Let me close with where this leaves us. Our job has not changed. Deliver energy and natural resources that are affordable, reliable, and increasingly sustainable. What has changed is the degree of difficulty, hence the need to remain focused on flawless execution through application of advanced technologies and, of course, including these days, increasingly AI, to optimize our activities. Indonesia and our region more broadly needs more upstream investment, not less. And we will continue to put capital into hydrocarbons while we steadily build our geothermal and solar projects. The two are not in tension, they are both required for our future. Let me leave you with this. None of us can do this alone. The era for easy energy may be behind us, but the era for energy that genuinely matters, energy that lifts economies, energy that supports the transition, energy that is held to a higher standard is in many ways just beginning. That will take industry, governments, and international partners working in the same direction, and we at MedcoEnergi are committed to playing our part. Thank you.
Abdullah, please.
Thank you, Dan. It's a pleasure being here in IPA. I think this is my first time to join the IPA. I think a lot has been said by the gentleman. I'm trying not to repeat or second, because I agree a lot with what had been said this morning. But looking at the easy energy, is it ending? I think, and we believe that the easy energy is ending, but the abundance of hydrocarbons still available. The world is not running out of hydrocarbons. I think the world is running into more complexity. You're looking at the capital intense, the new technology requirement, and the geopolitics, which is really now shifting the pyramid of the oil and gas industry since the late April of this year. The challenge is not the easy of hydrocarbons in the era. It's the access of low complexity or low risk of barrel, which is no longer is possible, and it is shrinking not because of geology, but it's also because of the geopolitics, because of the capital intensity, and a new technology requirement to develop. Also, the energy transition, the ESG requirements, that's also putting more burden to the investment. Also, some of the countries' local content rules also play vital roles in how to really invest in this upstream. So if you look at the technology in focus, we've seen that technology has been developed a lot in the last 10 or 15 years. If I take, for example, the shale technology development, we've seen the cost of production from shale has been improved a lot. And I think that's bringing the focus of the companies on how to improve the technology to make it more efficient and more low cost of production. Now, if I look at the oil demand and the peak of oil demand and growth, we focus on Asia, and Asia in particular is the core drive of any incremental demand throughout the late 2020s. Asia has been the focus for Kuwait, for KPC in particular. We've been venturing in Asia since the 1980s, so we're not new to this region. We look at Indonesia, Malaysia, and other countries as they are, strategic, alliance, and they are strategic partners when it comes to our investment. Now, if I look at the historic, and if we look at the oil demand throughout the last century, I think there are so many narratives that was published about the oil, that's going to hit the peak and it's going to be the plateau. Since the late 1880s, there has been so many narratives, but each time those narratives they have been broken. Each time we've seen the global reserves, they're doubling the figures. The production, they've gone maybe 3 times for the last 100 years. So the oil and the hydrocarbons will remain there, but now the question is, what are the challenges to overcome in order to really venture and to expand more into the E&P? Now, geopolitics, I think we've seen since the 80s, if I take, for example, Strait of Hormuz, it had been, off and on, some constraints with the Strait of Hormuz in the 80s and the 90s. But I think what we are now facing for the last almost 2.5 months is something that will lead the GCC countries to think of a permanent solution and a permanent investment to overcome those challenges. So I'm looking forward for the discussion, Dan, and hopefully we will be seeing some of the shared thoughts.
Excellent. No, thank you guys. Thank you for all the speakers and for those opening insights. Thank you very much. Yeah, I think just to kick off kind of the Q&A here, just listening to each of you, I heard a lot about, balance, risk, resilience, right? So let's kind of kick off with that theme to begin. Abdullah, I want to stay with you for a moment. So, Kuwait is at the center of this current kind of geopolitical crisis. So how does what's happening today, maybe change the way KPC operates, and what is KUFPEC's role in that future as you think about risk and resilience?
So like I said, Dan, Kuwait and the GCC in particular, we're not new to this geopolitics. But honestly speaking, this time I think it's making the GCC country to think, of a permanent solutions. Now, when it comes to KUFPEC and KPC, since the 80s, KUFPEC, it's been the right arm of KPC for investing outside Kuwait. So KPC, they have so many subsidiaries. Some of those focuses on the local investment within Kuwait and the upstream and the downstream, but also they have their arms for investing outside of Kuwait. Now, because of the current geopolitics situation, we're not going to be divesting a lot from investing in Kuwait, but definitely we will be rethinking of how we're going to be strengthening our expansion globally. And it's a reality check that, the strategy that KPC implemented since the last 3-4 decades, it's really paying off today. Our investment in Asia, in Canada and Australia, we're now seeing a lot of positive results coming out of those assets. Last week, I was attending the KPC Board General Assembly, and there was strong messages that we need to see more investment coming out of KUFPEC internationally. So yes, I think our presence here today in Indonesia, this is a message that we are focusing and we want to expand. I was talking to Mansoor this morning. I said, just flying out of Kuwait was not easy. You can feel that, the situation, the airports, it's not how it used to be. But we wanted to, us and the team here, to be present to make sure that, we are here and we are willing to deploy more capital, actually.
Excellent. Well, we're glad you're here and your presence is needed. Thank you. Yes. Taufik, I wanted to come back to you. You talked about the industry having kind of make this choice, between security and transition. How is PETRONAS balancing risk and resilience in this era of no more easy energy?
I just want to pick up on what my friend Sheikh Mansoor framed as something that should not be seen in isolation. This is not a binary question. There is a means of delivering energy security long term without foregoing energy transition. As we've seen in the near term, because of the nature of how economies are growing, and we cannot separate the need for energy and economic resilience. In the near term, what we're seeing is not just transition, we're seeing energy addition. So it is a case of us complementing the current conventional hydrocarbon powered systems that are going to also be complemented by renewables in the future. Now, I laud the measures being put in by our friends from Medco. In PETRONAS, we refer to delivering advantage barrels, but that's not just purely from a cost competitiveness. It is also after accounting for the carbon intensity per barrel. We have a long-term target of bringing this below 17 kilos per barrel. We want to make sure that our emissions are within a net zero pathway, which is eventually by 2050 going to be in accordance and aligned with the Paris Agreement. But we have to deal with the economic realities of today, and the economic realities of today, particularly as we sit in the heart of a 700 million population that is driving energy demand at about a spurt of 3 to 4%. The world's showing roughly 2%, but we've always outpaced it just because of the sheer phase of our development. These cannot be dealt with in isolation. I cannot focus on just delivering the needs of today without having a view that at some point in the future, the energy system is going to evolve. But the reality is we need both. We need both today. And denying ourselves that reality is just causing a lot of harm to companies, to societies, and indeed to governments at large, because the fiscal burden of allowing something which already is not easy to get to become even more scarce, it's going to be immensely heavy for governments, particularly at emerging development and developing economies, to contend with. So, as a national oil company, we answer this question as one that we deal with both dimensions. As we plan for the future, we embed consciously how these metrics of success are going to be called out. And those metrics of success include accounting for carbon intensity, stability and resilience within our core fossil fuel-based systems. And I think you can't deny it. I don't know whether we have counterparts from PLN here, but from the general reality that we're contending with, this region still uses 70 to 80% fossil fuels for power demands. And I think you cannot change that overnight. There is an immense set of investments required to have connections, grids, that amounts in the trillions. But what we can do as an NOC is deliver the core fossil fuels differently as much as we invest into these newer alternative energies.
So let's pick up there. Mansoor, you talked about security and transition being linked. So what does a resilient portfolio look like at Mubadala in the future?
I think from our perspective, I think it's very important to adding new resources for Indonesia is critical. And it aligns with the energy security and energy transition goal that's set for the country, including the target of doubling the gas production by 2030. And our developments in our South Andaman discoveries sit center to support this strategy. We are accelerating our plans to develop our deep water discoveries, and we are excited about it, as well as we will be, especially that this will deliver a low carbon energy compared to coal, where it's currently accounts around 68% of the electricity supply of the country, according to Institute Energy Economics and Financial Analysis. So what does that mean for the next 5 to 10 years for the upstream sector? I believe we need to continue with the momentum and focus on the long-term partnership. And for instance, in our case, we've been experiencing that great support here to accelerate our discoveries and bring them into on track to develop and produce with that sort of support from the regulator, and seeing that progressive shift from the regulatory framework that is being made, especially for deep water discoveries. We believe that requires the right terms in order to commercialize and take it into development, as well as streamlining permits processes. This is one of the most important key factors to accelerate execution phase, and that's allowed us to put a target for bringing our first gas from Tengku, which we are planning hopefully this year to FID before the end of this decade. In addition to that, It's very important that we don't discount technologies. It's very important. It goes hand in hand, and it has to be embedded within every single activity that we do to provide efficiencies, create solutions, accelerate execution, come up with new opportunities and ideas, especially when it comes in our case here, deep water drilling exploration activities that are challenging, will be required, and it's already proven that it is working very well from Mubadala energy side, and that helped as well to accelerate. When we look at the broader picture, we're talking about resilience of a portfolio, we focus on three key factors. There are three key things that keeps in mind. Mubadala Energy focuses on a long-term committed partnership despite any volatility. We provide deep expertise as well as patient capital. Our portfolio, second important addition that I can add is geographically we are diversified. Mubadala Energy is a gas-weighted company present in 10 countries. We've been active growing in key energy hubs. Last entry to a new market for us was last year in the US market. Is one of key energy hubs that we are excited about, and we have entered into through an acquisition in an integrated gas company called Ketoros, and that's something that we will use as our platform to grow. And expanding in the gas value chain is very important and critical. Recently, we've delighted to be announcing our Commonwealth LNG FID, which is extension of our portfolio in the US, and as well, we are excited about it.
Thank you, thank you. Okay, I want to come back to you in Pertamina. So how is Pertamina responding to or planning for risk differently today than it may have done previously?
Yeah, thank you, Dan. So first of all, risking can be dealt by having several actions. First one is partnerships. As now we are having a very strong partnership with PETRONAS. PETRONAS is very strong on natural gas. So by basically having partnerships, we are reducing the risk by sharing expertise, sharing the knowledge that we have. And then secondly, of course, we always try to engage and having or giving advocacy to our government, because the regulatory framework is the key. Anywhere we seen that the rate of return is limited, we try to have either the time length or basically the split, etc., fiscals from the governments. And the third one, basically, risk can be reduced by having the best technology that we have. Because we have here, for instance, ENI, which rely on the supercomputer and AI, which is also good for us to reduce risk. So indeed, the risk is part of our business, but we try to reduce that by having partnerships. We have so many partnerships here within this room, and then by technology and by advocacy to the governments to have the appropriate permit and also fiscals.
You mentioned partnerships. I see we have a question from the audience that talks about, given the prioritization of energy security and domestic supply, do we see a more fragmented or nationalistic energy market? It sounds like what I'm hearing from all the speakers is actually no, partnership is more critical than ever, right? Company partnership, government partnership, maybe more strategic regional alliances seem to be the direction of the future, not a more fragmented nationalistic view, if I kind of take what you guys are saying. Roberto, I wanted to come back to you as a leading publicly traded energy company. What is the risk calculus? How is it different for you as a public company? How do public investors kind of view this risk versus resilience?
Well, I would say in 2 words, I would say, we are a public company. Every day we are in the market. We are a huge number of investors. either shareholders or equally important, our bondholders, because this is a company that over the last 10 years has grown through a large extent debt, meaning accessing international capital markets, seeking the capital to grow the company. In 10 years, our market cap is increased by 10 times. I already spoke about EBITDA, if you look at our growth in production, assets, and the like. So in order to be able to access that capital as a public company, you need to have a proposition, a value proposition which is credible. Value is made by many, many different components, and every time you meet your investor, there are tens and more questions on different aspects, on all aspects of your business. But if I had to try and capture in 2 words, it's value visibility. You have to be able to show what your proposition is anchored upon. What are your assumptions in terms of assets, markets, scenarios, your capabilities. And that's why I said before, you need to be very balanced between your ambition to grow and the opportunity that is there to grow, but you have to balance that ambition with with the understanding and realization of your capabilities. And then you need to try to get the right balance. What I found very interesting in the last 2 years in approaching our investors is how some questions have shifted. You will all remember in this room that a few years back, it was all about energy transition, climate change, energy transition, and so on. And we got to a point where a number of investors, international banks, were not willing to fund any more oil and gas projects. Post-2022, the war in Ukraine, the other geopolitical tensions, of course, energy security has come back at the top of the agenda. Energy security in its different articulations, including affordability, reliability. But sustainability has not gone away, actually. And what we have seen that while investors have become more, I don't want to say pragmatic, or become more realistic about how you can actually transit to a new form of energy, how long it will take, and how much money and resources will be required. They also become more understanding that different regions in the world are going to move at a different speed. But I think that the world and the expectations of our society and investors for us is that energy transition will continue, will happen. We see even in the consumer behaviors today, you see from the number of EVs on our roads. They might not be increasing at the speed that people were naively expecting a few years ago, but it is going on. What really I think maybe has taken by surprise, to a certain extent, everyone and possibly also our industry, actually is the speed at which digitalization, data centers, AI are increasing and the amount of energy they are requiring. Now, I'm taking a long story to say that value visibility, but a part of our proposition, important for us, actually, we've seen as much that investing in ESG, actually, it's important. It does provide a return. We spent a lot of money and resources. We are very proud, of course, that MSCI has now assessed up to a AAA. And we have seen as this investment in ESG, which is not just, of course, environment, it's environment, societal, and governance. The combination of those with governance becoming heavier and heavier, it's, I think, for everyone, but certainly for a company like us that has every day to confront and trying to maintain the trust of our investor. That component is very important.
All right, we're coming to the close of the session, so maybe just one last kind of question to each of you, and I want to kind of bring it back to Asia and Indonesia kind of specifically. So just really quickly, Abdullah, I'll start with you, and then we'll kind of come down the line. So what do you see as the opportunity in Southeast Asia specifically for KUFPEC?
Oh, we're seeing big opportunities. Southeast Asia had been the center of our core investment, not only in the AMP, but also in the downstreams. So you see also our sister company, KPI, also investing in the refineries in Vietnam, etc. They're always in the look of more investment. So let me just jump to what are we doing? To walk the, what did they say? Talk the talk, walk the walk. So we're looking at seriously at so many opportunities as we speak now, and we're putting a lot of money and bidding on opportunities and studies in Indonesia, Malaysia, and those we hope that they will be materializing very soon. So Asia had been always a strategic place for KUFPEC to invest in since the last 3 or 4 decades.
Roberto, what does success look like for Indonesia's upstream going forward?
Oh, I think Indonesia has a huge amount of resources. It's blessed with so many resources. I think Pertamina already gave it a highlight about the huge potential that still lies in the country. The good thing is that actually the government not only has realized the potential of these resources, but they also realize that exploring for, developing new resources is going to be a difficult exercise with technical operational risks, huge capitals are requirement, long-term planning is required. So, as someone who has been here for so many years, and as someone like me who has been involved with IPA for so many years, I've been very pleased to see how, in the recent years, an approach to a more flexible regulatory framework has been pursued. So I'm positive about that.
Excellent, excellent. Mansoor, what does success look like for Mubadala here in Indonesia going forward?
I think we've had a great journey in Mubadala in Indonesia for MedcoEnergi. It was like a great track record for Mubadala previously when we used to operate one of our gas fields called Subuku, which we lasted around 13 years without any LTI or any incidents, which is a great track record for our operatorship here in the country, and with our great results with the exploration discoveries that has been made in the last couple of years. It's a great achievement for us, and it's a new chapter. But maybe let me flip it in a different way. For Indonesia, here I think there are major factors that helped to de-risk our opportunities to move forward in respect to growing our presence in the country. First of all, there is a conviction. I think it should be very important that we have that strong belief about the opportunity that's been identified. And we've gone after our, first of all, an idea of Andaman area, result of this discovery with the support of the government and the belief as well, enabled us to make these great stories. Second, which is very important, partnership. It's one of our core values in Mubadala Energy, built on trust, transparency, and from our experience here in the country, we've been gaining that sort of support, trust, sharing experiences, and collective risk management, even in volatile times. This enabled us to navigate in so many challenges, as well as certainty in the regulatory framework environment, which so far has been Yeah, it's a great example for us moving fast track our plans to ensure that we bring our resources into production with targets that are set and aligned with the support of the government, with the support of the regulator and our partners as well.
Thank you.
So in a nutshell, I think the opportunities are significant here, and the next chapter of energy in this region will belong to those who are willing to invest in conviction, partnership, and disciplined execution and long-term focus.
Excellent, thank you. Taufik, maybe for you a bit more broadly, what do you see as catalysts for investment into Asia's upstream sector more broadly? What are the catalysts?
Yeah, thank you for that. I'll try and link it because I saw the full question earlier and you said fragmented. I think the person who posed the question was also saying that will practices become more fragmented, nationalistic? Maybe time for a bit of audience participation. How many of you swim? Can you raise your hands? How many of you swim? All right. What's the first advice that you get when you move into deeper waters and with currents? And I'll answer in Indonesian so the Indonesians will appreciate this. Jangan kaget, tetap kalem. Jangan kaget, tetap kalem, terus konsisten. Means keep doing what you're doing, know where you're heading, don't panic, and stay calm. Now, I don't want to belittle the current crisis that we are facing together, but you must do exactly the opposite of your natural reaction here. And I'm speaking out to regulators, of which we are one, as well as in Indonesia and much of Asia. In contrast, in absolute contrast of what you need to do, you need to embrace partnerships. There could be people with the exact technology, know-how, capabilities that help you unlock your resources. And that's exactly what we're trying to do in Malaysia. Our bid rounds try to bring the right assets to the right partners. So we unlock it in a time where crisis is probably going to be escalated. Now, we don't know how long the situation is going to last, but with Asia, I don't think you have an issue with ascertaining demand. Because what you've seen with a 700 million population, with a GDP like Indonesia of 1.5 trillion, and an escalation of asks, I think you have secure demand. The problem is, as Mansoor and Roberto have clearly expounded, is making sure that the supply is consistent, and this is why responses must be both regulatory clarity and openness, as well as the willingness to be partnerships, enter into partnerships with conviction for a long-term outcome. That's it.
Thank you. Okay, you get the last word. What's success look like for Indonesia?
Yeah, basically, we heard from Tan Sri, from Mansoor, from Roberto, and from Abdullah several similar words: the partnerships, the regulatory frameworks, and for us, due to the sense of urgency that we have nowadays with the geopolitical tensions, we need accelerations. So we appreciate that we need to accelerate the partnerships, we need to accelerate the regulatory frameworks, and we appreciate the efforts to have the proper ecosystem for oil and gas in such a way that we can increase the production as soon as possible.
Excellent, thank you. Please join me in thanking our panelists as we wrap up.
Thank you, moderator, and our esteemed panelists. Please remain on stage and kindly move forward as we proceed with token of appreciation. We kindly invite IPA Board, Ibu Mary Luciawati, to present the mementos. We can all agree that was such an excellent insight, so please give a big round of applause to our panelists. Once again, thank you to our esteemed panelists and moderator for the insightful session. Gentlemen, please stand together in center stage for a picture. Ibu, kita akan abadikan sesi foto bersama. Okay, now let's give our best smile for the camera in 3, 2, 1. Once again, 3, 2, 1. Thank you to our moderator and panelists. Please give another warm round of applause, ladies and gentlemen. However, we respectfully request Bapak Oki Muraza, Bapak Tengku Muhammad Taufik to remain on stage. Sekali lagi Pak Oki dan Pak Tengku mohon untuk tetap berada di atas panggung. And thank you very much, ladies and gentlemen, Ibu Mary, Mr. Daniel Pratt, and our esteemed panelists. You may now return to your seats. Ladies and gentlemen, as we celebrate the Jubilee 50th edition of the IPA Conference, the Indonesian Petroleum Association proudly presents the 50th IPA Conference Contributor Award. To present this special honor, we are pleased to invite the IPA President, Ibu Kathy Wu, to join us on the stage. The Major Industry Contributor Award in recognition of the company's substantial contributions to IPA Conference is proudly presented to Pertamina Persero. Accepting the award on behalf of PT Pertamina Persero, Bapak Oki Muraza. Please, Ibu Kathy Wu, to join us on the stage to present these special honors. And next award, the International Honorary Contributor Award in recognition of his exceptional contributions to IPA Conference is proudly presented to Bapak Tengku Muhammad Taufik, President and Group CEO of PETRONAS. And now we have a group photo opportunity. Please look at the camera. In 3, 2, okay, once again, please look at the camera and 3, 2, 1. Once again, 3, 2, 1. Thank you, Bapak Tengku Muhammad Taufik, Bapak Oki Muraza, for your contribution to IPA Conference 2026. And thank you, Ibu Kathy Wu. Congratulations once again. You may now return to your seats. Once again, everyone, please give a big round of applause to the cornerstones of our conference development.